Imagine a world where money no longer exists in your pocket. No physical cash, no banks controlling your payments, no waiting days for international transfers, no restrictions on who you can send money to. Instead, money exists only in digital form, protected by advanced technology, and controlled directly by the people who own it. This may sound futuristic, but this is exactly the world cryptocurrency is trying to build. Over the last decade, cryptocurrency has grown from a strange internet experiment into one of the biggest financial revolutions in modern history. Some early adopters of cryptocurrency became incredibly wealthy. Others lost large amounts of money because they entered the crypto world without understanding how it works. And today, millions of beginners around the world are curious but confused. They hear words like Bitcoin, Ethereum, blockchain, digital wallets, mining, trading, staking, and many more complicated terms. But the biggest question remains: what is cryptocurrency, and why is it changing the world? In this video, we are going to break down cryptocurrency in the simplest and clearest way possible. By the end of this guide, you will understand what cryptocurrency really is, how it works behind the scenes, why it was created, the major types of cryptocurrencies, how people earn money in the crypto space, the risks involved, and how beginners can start safely and intelligently. This is your complete beginner foundation to understanding digital money. Let's begin. To understand cryptocurrency, we first need to understand money itself. For thousands of years, humans have used different items as money. In ancient times, people used goods like salt, livestock, and precious metals to trade. Later, societies developed coins made from gold and silver. Eventually, paper money was introduced and became widely accepted as currency. But modern paper money is very different from gold or silver. Paper money has value mainly because governments declare it valuable and people trust it. This type of money is known as fiat currency. Examples of fiat currency include the US dollar, the euro, and many other national currencies. Governments and central banks control fiat currency. They decide how much money should be printed and circulated in the economy. While this system works, it also has weaknesses. When governments print too much money, inflation occurs. Inflation reduces the purchasing power of money, meaning your money buys less over time. Additionally, traditional banking systems involve middlemen who control transactions, charge fees, and sometimes restrict access to financial services. Cryptocurrency was created as an alternative financial system designed to solve many of these problems. Cryptocurrency is digital money that exists entirely online. It is protected by cryptography, which is advanced mathematical technology used to secure information. Unlike traditional money, cryptocurrency is usually not controlled by any government or central authority. Instead, it operates through a decentralized network of computers spread across the world. Decentralization means that control is shared among thousands of participants, instead of being managed by a single organization. This reduces the risk of corruption, manipulation, or centralized control. The first cryptocurrency ever created was Bitcoin. Bitcoin was introduced in 2009 by an unknown person or group using the name Satoshi Nakamoto. Bitcoin introduced a revolutionary idea: money that could operate independently from banks and governments. Bitcoin transactions allow users to send money directly to each other anywhere in the world without needing financial institutions. This concept quickly gained global attention. To truly understand cryptocurrency, we must understand blockchain technology. Blockchain is the foundation of most cryptocurrencies. Imagine a public record book that records every financial transaction. Now imagine that thousands of identical copies of this record book exist across computers worldwide. Every time a cryptocurrency transaction occurs, It is recorded in this record book. Once recorded, the information cannot be changed or deleted. This record book is called a blockchain. Blockchain works by grouping transactions into blocks. Each block is connected to the previous block, forming a chain of blocks, which is why it is called blockchain. Because thousands of computers verify every transaction, blockchain becomes extremely secure and transparent. Anyone can view blockchain transactions, but identities remain protected through encryption. Blockchain technology is considered revolutionary because it creates trust without requiring intermediaries. Since the creation of Bitcoin, thousands of cryptocurrencies have been developed. These cryptocurrencies serve different purposes and use different technologies. Bitcoin remains the most valuable and widely recognized cryptocurrency. Many investors consider Bitcoin to be digital gold because it has a limited supply. Only 21 million Bitcoins will ever exist. This scarcity helps protect its value over time. Another major cryptocurrency is Ethereum. Ethereum introduced smart contracts, which are self-executing digital agreements that operate automatically when certain conditions are met. Smart contracts allow developers to create decentralized applications, financial services, and digital systems without relying on traditional institutions. Stablecoins are another important category of cryptocurrency. Stablecoins are designed to maintain a stable price by being linked to real-world currencies like the US dollar. Stablecoins help reduce volatility and are widely used for trading and storing digital funds. Altcoins refer to all other cryptocurrencies created after Bitcoin. Some altcoins focus on faster transactions, improved security, enhanced privacy, or innovative financial solutions. One of the most common questions beginners ask is how people actually make money from cryptocurrency. There are several methods. The most popular method is long-term investing. Investors buy cryptocurrency and hold it for months or years, hoping its value increases. This strategy is based on the belief that cryptocurrency adoption will continue growing globally. Another method is trading. Crypto traders buy and sell digital assets frequently to profit from price changes. Trading requires market knowledge, technical analysis, and emotional discipline because crypto prices can be highly volatile. Staking is another income method. Some cryptocurrencies allow users to lock their coins to support the network and earn rewards over time. Staking is similar to earning interest from savings. Mining is another method, although it requires specialized computer equipment. Mining involves verifying transactions and adding them to the blockchain while earning cryptocurrency rewards. Additionally, many people earn income by working within the cryptocurrency industry. Jobs include software development, blockchain engineering, project management, marketing, and education. Despite the opportunities cryptocurrency offers, it also carries serious risks. Cryptocurrency prices can rise rapidly but can also fall dramatically within short periods. Market volatility is one of the biggest risks for investors. Scams and fraudulent investment schemes are also common in the crypto space. Some scammers create fake projects promising guaranteed profits to attract inexperienced investors. Another major risk is losing access to digital wallets. Cryptocurrency ownership depends on private keys or passwords. If someone loses these credentials, their cryptocurrency may become permanently inaccessible. Because cryptocurrency transactions are usually irreversible, users must take security seriously. Education, research, and caution are extremely important for anyone entering the crypto world. For beginners interested in cryptocurrency, starting safely is essential. The first step is education. Understanding cryptocurrency fundamentals helps reduce investment risks. The second step is choosing reliable cryptocurrency exchanges. Exchanges such as Binance, Coinbase, and Kraken allow users to buy, sell, and store digital assets. The third step is starting with small investments. Beginners should avoid investing large sums until they gain experience and confidence. The fourth step is securing digital assets using trusted wallets. Hardware wallets and private wallets provide stronger protection compared to leaving funds on exchanges. The final step is remaining cautious of investment hype and online scams. If an opportunity promises guaranteed profit, it is usually a warning sign of fraud. The future of cryptocurrency continues to generate global discussion. Many experts believe blockchain technology will transform multiple industries beyond finance. Banking systems may become faster and more efficient. International payments may become cheaper and faster. Digital ownership of assets such as art, music, and real estate may become more accessible through blockchain. Governments are also exploring digital currencies known as central bank digital currencies. Large corporations and financial institutions are investing billions of dollars into blockchain development. Although the future remains uncertain, cryptocurrency has already changed how the world thinks about money. Understanding cryptocurrency today may provide valuable opportunities in the future digital economy. If this video helped you understand cryptocurrency, make sure to like this video and subscribe to the channel. This channel is dedicated to explaining cryptocurrency in simple, beginner-friendly language. In the next video, we will guide you step by step on how to buy your first cryptocurrency safely and avoid beginner mistakes. Share your thoughts in the comments section. Have you ever invested in cryptocurrency before, or are you planning to start soon?